Let's talk about a financial name, in fact, and this is the big brokerage call of the day. Bernstein has come out with a note on Kotak Mahindra Bank. It has maintained its market perform rating. The target price that it is placed on the stock is 1,950. Hersh joining you to tell you why that is. Hersh, downside is being looked at by Bernstein.
Well, yes, 8% downside, in fact. So, sizable. What the concern that Bernstein seems to be pointing out and what they seem to have really picked up is that incremental cost of funds is the highest among peers, where the cost of funds for peers have gone up by less than 20 basis points, which is 0.2%. For Kotak, it's gone up by over 30 basis points. And while Kotak is garnering decent market share in that sense and therefore growth is strong, but they believe that this particular element will keep margins in check and will keep margins under pressure. In fact, they believe that the gap could widen, which could lead to margin compression for Kotak disproportionately higher than other private banks. Upsides also is what they highlight. Possible upsides, something of a downside of sort to whatever they are penciling in. Sharp rebound in consumer credit demand, a prolonged tight liquidity environment, structural shift to permanently lower CASA ratios across the sector. Any of these three or all of these three could well aid Kotak Mahindra Bank because it will outperform in these scenarios. But outside of that, slightly tepid note coming on a day otherwise where banks have done well yesterday at least. So, and hence this one is relevant.
Kotak Mahindra Bank on watch. ICICI approved, doing okay in the pre-open session. Watch out for reaction to results as well. ICICI Pro and IREDA, both in that space. In fact, let me come to Chandan on that. ICICI Pro, IREDA, if you have a view, and Trent as well, Chandan.
So I'll start with IREDA. The stock is really bottomed out, technically speaking, rounding bottom and double bottom kind of formation on the weekly chart. It surpasses falling supply trend line and surpassing its 50-day exponential moving average after 62 long trading session. We have seen a surge in the trading volume, which also indicates the positive momentum. So I believe positive bias could be there. Stock is bottomed out and Nifty CPSE index is also doing well. So with support of 163, I believe 185 to 190 kind of target could be there in IREDA.
There is a fundamental and a technical consonance on IREDA, PFC, REC per se, IREDA in particular, but I think Chakri mentioned that he likes PFC, REC too. So bear those stocks in mind. The other set of stocks that we need to watch out for are the IGL, MGLs of the world and ONGC in that regard. And just want to pull up, it's about 7 minutes done, so we're very close to the pre-open rates getting settled down. Likely that IGL, MGL start off lower, MGL in particular about 5% lower. I wonder if ONGC is actually doing the opposite. Interesting. No, I think these will change, but okay, flattish start, nothing too dramatic in such a scenario. Now, Chakri, I don't know if we spoke about this or no, but I'm presuming we haven't, and which is why my question to you, now that the price action is visible here, this APM gas allocation being cut, so on and so forth, some bit of damage in prices has already happened beforehand, now further damage. Is it baking in the negatives of such a move, or increased regulatory action would keep you away from this bucket?
Absolutely right. The regulatory action will keep us away because prices, volumes, everything is subject to regulatory oversight. And in such an environment, it becomes difficult to forecast what the earnings would be. And in such a volatile environment, there's enough other stocks and other sectors that's available, so we'd stay away.